Hey guys, David here from the Financial Couple. So on today's video, as you have already seen in the title, we will be going over speculative stocks. On the previous video, we talked about blue chip stocks, so make sure you go watch it in case you missed it. I will link it down below for you guys. As I have mentioned before, we are switching gears and we will be going over types of stocks for the next couple of videos. So don't forget to hit the like button, subscribe to the channel, and activate the notification bell so you know when the next video is up. So without any further ado, let's get started. Speculative stocks are stocks that represent a high grade of risk. If we look at the actual definition, we will see that speculation is based on a guess rather than actual information. We can also say that speculative stocks are the purchase of a stock with the hope of getting a high return in the near future. Some examples are emerging market stocks, which are invested in assets of not fully developed countries. This type of stocks may seem attractive to some investors since they tend to have higher volatility levels in comparison to blue chip stocks, which means that they will have a greater level of return but at a higher risk. It is very common to see speculative stocks in technology and in energy sectors. Most of these stocks are companies at an early stage that have the possibility to become the next big thing by offering plenty of motivation to speculators for giving them an opportunity and invest in them. These stocks tend to be held by investors with previous experience, and it usually only takes a small portion of the portfolio, which may increase their return without adding too much risk due to the overall diversification of it. If you're an investor looking to invest in this type of stocks, you should look for a business with a long-term vision, great management, and strong balance sheets. However, risk management should always be applied to avoid aggressive declines, which will be covered later on. Here are some pros and cons for speculative stocks. They tend to outperform the market during bull markets. They tend to underperform the market during bear markets. Their share price is usually low. Valuation metrics and ratios do not apply to this stock since they are typically not profitable. They require more research time. They may be the next big thing. They could become a blue chip stock in the near future. Now let's go over some examples. First, we have Immune Incorporation with a ticker symbol of AIMT. As you can see, their market cap is in the billions. Now, looking closer to the graph, we can see that between 2017 and 2018 was definitely the best time to buy this stock since it skyrocketed by doubling its value. But now, if we look at the 2018 and 2019, the stock just went downhill and it hasn't been able to recover ever since. Here's another example. We have Eager Inc., ticker symbol EIGR. This stock only has a market cap in the millions. If we look at the stock between 2014 and 2015, we can see consistent jumps and pull downs. However, after March of 2015, the stock went from $400 to $15 in August of the same year. I want to leave you guys with this quote from David Sermon, who worked over 2 decades as an investment analyst. Some of these speculative stocks do eventually emerge as heady winners, but now this is more about gambling than investing. You should look back at a company's history. If it has been trying to build a business for many years, then it's hard to see why this is the year for sales to finally grow. Guys, if you found this video helpful, please help me by hitting the like button and subscribe to the channel. Follow us on Instagram at The Financial Couple. If you guys have any further questions, please place them down below in the comment section and I will get back to you as soon as possible. Besides that, I will see you guys on the next video.